Ladies and gentlemen, this is the Trucking Trader, and we are back with another legendary video. On today's agenda, we are going to be talking about liquidity raise and stop hunts. We are going to also introduce liquidity pools, how to find high probability liquidity pools. We're going to talk about order blocks today, high accuracy entry points, low draw entry tactics, and high probability targeting in this video, you guys. So this video is going to be so cool. You guys want to make sure y'all stick around for the entire video. Trust me, if you are a new trader, there's going to be nothing but gems in this video. So make sure you stick around. Also, before we get into the breakdown, make sure y'all drop a like on this video, subscribe to the channel, and if y'all have any questions or any recommendations, make sure y'all leave a comment towards the end of the video. So let's get straight into this video, you guys. The first thing you guys want to start doing as a new trader is looking at just a bear chart, okay? Looking at a bear chart. And the first thing you want to be able to start doing is identifying liquidity, all right? And one of the best things that can help you identify liquidity is knowing what a swing loss and what a swing high is, right? Knowing what equal highs are, knowing what equal lows are. See, in the retail market, a lot of retail traders, they see equal highs and they think of it as resistance, right? But as an institutional trader, we don't do that, right? We look at this as liquidity. So as you guys can see, as a new trader, you want to start identifying your liquidity zones. So the blue lines that I made on this chart is the liquidity zones, right? And as you guys can see, these long wicks, right? Those orange circles in which I tried to highlight for you guys so you guys will be able to see it a lot better. Notice how every orange circle has a long wick on it, right? And why does it has a long wick? Well, because the market came through and swept liquidity. Now, what does that mean, right? Normally, when you see a clear market structure shift, meaning that the market is getting ready to change directions, you typically see the body of that candle close below the liquidity, right? If you're going to see a real market structure shift. But when you see a liquidity sweep, it's typically just a long wick. And that's because the market came down, swept that liquidity, and then it went right back up real fast, right? Or it came up to sweep the liquidity, then it went right back down real fast. And this is another reason why I made videos about long wicks and why they are so important. Because when you're using long wicks, right, the reason why they work so well is because the market has already come to grab the liquidity. And if you mark out the halfway point of that wick, technically, right, if you start to understand liquidity raise and how they work and the phenomenon of it, you will understand that the market isn't going to want to go back and sweep that liquidity again, right? So, for example, if you look at the circle that's on the bottom right-hand side of the market, notice how the market had no interest of going back down there so far, right? If you look at the orange circle that's at the top on the far right hand, notice how after the market swept that liquidity, it had no interest of going back above that long wick candle, you guys. So this is why I always try to get you guys to pay attention to the wicks, right? But in this video, we're mostly talking about liquidity, all right? So when you're looking for liquidity, if you want to start spotting it really easy, look for the wicks, right? Look for the equal highs. Notice how that second blue line from the top that says liquidity, notice how those are fairly equal highs, right? So this is just one way for you guys to be able to spot liquidity. And this is something that if you're a new trader, you have to start practicing this over and over and over again. And trust me, it's going to really help your trading. If you cannot identify liquidity, you do not need to be trading in the market, because the rules are, if you can't identify liquidity, then you are liquidity, all right? So the next thing I want to do to show you guys how to find really precise entries, notice that big long candle, right? We are now on the hourly chart, right? Those last two slides was came from the 4-hour chart, by the way, you guys. Sorry, I probably should have mentioned that. But notice how on the hourly chart, I measured out that wick, right? I even put a little arrow on there for you guys to see. I measured out the wick and I put a dark yellow line at the halfway point of that wick so you guys can be able to see how the market tends to react off of these long wicks, right? Now, this is a live breakdown on today's market. So I'm like, and that's why I think this video has so much information and it's going to be so good. I just really need you guys to stick around to the end. I'm telling y'all, just be patient with me. This video is going to be nice, right? I'm trying something new with using some slideshows because I don't really have the best equipment right now to go live and make live videos or to make some really good pre-recorded videos for you guys right now. So I'm just trying to do the best that I can do to give some information back to the community. So if y'all appreciate that, make sure y'all hit that like button as well. So look at that dark yellow line, right, on that wick. That dark yellow line is the midpoint of the wick, right? That little greenish shaded box was the order block that we identified on our 4-hour chart. So if you guys didn't see exactly where I had it marked, just rewind the video and go back to that slide and you will notice those were the order blocks on a 4-hour time frame. And if you want to spot a really precise entry, notice how when the market hit that midpoint, right, we're going to drop down. This is the 1-minute chart right now. Notice how when the market first made contact with the midpoint of that wick, look at how it sold off a little bit, right? This is typically how I like to trade. Now, at the time of this recording, I think it was like 9:29 a.m. The market was just getting ready to open. So that's one of the reasons why I did not take that trade. But I just wanted to show you guys, if the red line is my stop loss, right? We're talking about a 10-point stop loss. And if I'm taking this trade from the midpoint of that wick, that's like a 1 or 2, 1 or 1.5. I don't know. But if that was in my time frame, I would have easily taken that trade, right? That is all I do every day. So this is the 1-minute time frame. Notice how the market came down, right? It went into that 4-hour order block, hit the midpoint of the 1-hour wick, and then it came back down, hit the midpoint of the 4-hour order block, and then it spiked back up on a 1-minute time frame. So what does that tell us about price action when we're watching this live? It tells us that the market wants to continue to go higher. So when the market wants to continue to go higher, you guys, you don't just keep trying to sell. You have to listen to what the market is telling you and possibly just do a brand new analysis, right? And essentially, that's what I'm going to do right here. So what I did was I noticed that the market had no interest in selling. So my new question is, where is liquidity? What is the market trying to reach for, you guys? Because there's two things that moves the market, right? And if you're a new trader, I want you to write this down. I want you to put it in your notes on your phone. But this is one of the most important concepts for you to remember. There's two things that moves the market: liquidity and imbalances, right? Imbalances meaning fair value gaps. PD arrays also moves the market, like order blocks, right? Fair value gaps, things like that moves the market. So liquidity or imbalances or PD arrays like order blocks, right? So on this daily time frame, you guys, this was my new analysis. I had to zoom back out, right? After doing my first analysis and the market was not behaving the way I wanted it to, I zoomed back out. I found new liquidity, right? And I marked that out on the chart for you guys. And then I'm also noticing that we have a daily order block right there that I put 2 arrows on a candle that I have highlighted on my chart. And so now as I'm looking at this chart, you're probably wondering, well, what do you do next? Do you just take the trade from this chart? Well, possibly. If you're a swing trader, you can take the trade from this chart, and where that red line is at on my chart, that will be your stop loss. And then you could target some of the lows on the daily time frame. But me, I am not a swing trader. So I'm more of a scalper or intraday trader. So what I like to do is I like to go to the lower time frames, maybe a 1 minute time frame, a 5 minute or a 15 minute time frame. And I like to wait for market structure to build inside of this daily order block zone.